And let's look at today's trades. So you remember, like last time we had two calls and one put, two call debit spread and two put debit spreads, both calendar spread. So I did deviate from that plan, but uh, uh, yeah, my intention was just to take quick profit. So what happened is, like, I invested around $1,000 again, and right now my investment is 2,500. And yeah, I was lucky yesterday and today, so I got a profit. Like, I had two puts of Tesla which got increased. Like, okay, you see, I bought a Tesla contract, a put contract at 190, strike price 192.50 during this week, and I bought it at 990 per contract. Similarly, another contract I bought it at 955, the same. So on an average, it's around 970. Sell one contract at 1140. So that was a day trade, and I book around $200 profit. And today morning again, I bought another Tesla of the same put 955, and today around, yeah, around 145 or something, around 145. I closed both the Tesla put, which was open, so at $14. So I had a profit, like maybe 700% profit. And all time, you see, the current investment is 2,500, and currently I have 3880. So my all time profit percentage is 55%. Yeah, so I split the two call calendar spreads. I sold at 324. So I bought it for 337, I think. 332. So $8 loss on two. So around $16 loss. I sold the call calendar spread. Calendar spread, I had to close each one of the put calendar spread, like whatever it was sold, I bought it at 165. And again, the another one also I bought it at 165. So if you 492, I think, here it's like 492, and current price is 405. $87 loss on two put, one put, and $8 on the other call side. So it's like $95 loss on each of these. So that was like a bad trade done. I should have closed it both together, like $95 loss on two, so around $180 loss. But still, because of the other two trades, right now I'm on profit, and hopefully I can close it tomorrow on some profit.